Just, okay, Jaden, Brickman, call me Chick. Okay, Higgins, Michael, Andrea, good evening. Janet, Michael, Antonio, Rick, Justin, Heath, Sammy, Jovan, what's happening? What's happening? Alejandro, ¿qué pasa? Michael Jean, bonjour, bonsoir. Comment ça va toujours? Ça va bien, non? Mr. Snow Miser. Ooh, I'm Mr. Icicle. I'm Mr. Snow. I'm Mr. something, something. I'm Mr. 10. I forget it. I forget. Hola, ¿qué pasa, amigo? ¿Cómo estás? Alrighty, alrighty. Timothy, Cooney, what's happening? Freckle Queen, back again. Good evening. Eric, how you doing? David, how are you? Let's see where we are. Let's see what we're doing. Alrighty, alrighty. So let's get the ball rolling. We're recording. Live. Oh, wait a second. I didn't do my Zoom call for that. Wait, did I? I think I did. Anyway, good evening. Do I have one? I don't know. Whatever. Let's get the ball rolling. Mr. Snow Miser wants to take a look at SWBI. All right. Well, let's take a look at it. SWBI. Why not? SWBI. That is Smith and Wesson. Ooh, I'm going to say no. Sorry, Snow Miser. You've been here long enough. You know I don't do monthly options. No, it just doesn't work for me. I want weekly options, something I can trade on a weekly basis. Good evening, James. I like to look at Hog. All right, Harley David Son. Here we go. Here's your top. Here's your bottom. Here's where it was a year ago. Here's where it is now. Look at this. Down, up, down. That's about it, right? Wait a minute, not so fast. We can buy it at $22.35. But the 20, no. We don't want to look at tomorrow. That's not enough time. We want to look at next week. What does next week look like? So $23.35. The 22.50 is going for 40. I'm going to say, yeah, that's not quite 2%, but I like Harley Davidson. Mr. Snow Miser, gotcha. I'll come back with a weekly option stock soon. All right. We'll see what you come up with. So let's take a good gander at Harley Davidson and see what's going on with this American icon. Okay, it's been in business for over 100 years. They got to be doing something right. All right, so let's look at the last 90 days. Going to need the glasses for this one. RHF. Tongue F. I have no idea what that is. Whoa. What's missing stuff over here? Who do we have over here? David, Jeff, Michael, VJ. None of y'all. None of y'all. Freckle Queen. Oh, my hair looks a mess. Why is that doing that? Here we go. Silver Eagle. I missed some stuff. Sean. John. Boneless. Nico. Steve. Brazil. La-di-di-da-di-di-da. Oh, who do we have over here? Kitty. Hey, Kitty, how are you today? Julie, good evening to you. Julie and Kitty. Alrighty. All right, so let's hold off for a second. Let's see what we have here. So Harley Davidson a year ago. Let's take a look. Where was it? A year ago from today. We have the high at 33.59. See right behind me? The high, 33.59. She drops like a rock. There's the bottom. Let's take a look. Oh, right there. 4.8. Wasn't that TDS? That was TDS day right there. TDS. April 8th. TDS. Okay, so that's the bottom right there. 2041. All right, so the April's bottom, 2041. We shoot up to 31, and then we drop back down to 22. Okay, the last 90 days, which is the last 3 months, take a look what's happened. Is the top right there. The bottom was 2 days ago. Now, you're going to make most of your money in the stock market buying low and selling high. Well, hate to be the bearer of wonderful news, but the bottom 2 days ago, you can't get any lower than the bottom of the year. Now, me personally, after I find a bottom, I want 2 days to the upside. So the bottom was here Tuesday. Today, yesterday, Wednesday, higher. Today, Thursday, higher still. So it's definitely bouncing off the bottom of the year. So ask yourself a couple of questions. Number one, does it make sense? That's first and foremost. Number two, do I like Harley Davidson? You may not ride a motorcycle, but you can at least appreciate the fact that this company has been successful for over 100 years. Come on, give credit where credit is due. Those glasses, yeah, they're dirty. How the hell do I see out of these things? All right. So that being said, let's take a closer look. Look at the last 30 days. So we have a good idea of where do we think it might be going next. Next. Okay, so 30 days ago was the 30-day top. She drops, not quite the 30-day bottom, shoots back up again and drops again, making the 30-day bottom on Tuesday. Wednesday and Thursday, both higher. So let's do a covered call on this bad boy. See what we come up with. Covered stock and the 2250s. That works for me. Well, let's do this. Well, nope, I don't want to do 10 of them. I only want to do one. I don't want to scare people away with, 10 contracts. Let's just do one. See how you like it. And then if you can get more, then get more. Right? We're all different. We all have different amounts of money. You may have more money than me. You may have less money than me. But we're all in the same game together. All right. So buy one covered call of Harley Davidson, HOG, 19 December. That's next Friday. Not tomorrow. Okay. Next Friday. The 22 and a half call option. So here's where I lose a lot of people. A lot of people saying that just doesn't make any sense. Well, here we go. See, if the stock is currently at 22.50, okay, the bid 22.37, the ask 22.50. So if I buy it at 22.50, sell it at 22.50, what am I making? I'm making what's called the premium. Basically, here's a good way of looking at it. I'm a concert ticket scalper. I go in and I buy the concert tickets and I turn around and I sell them to someone else for the same price I paid for them. And for their gratitude, they give me a premium. In this case, it's only $58 for just one contract. Well, one contract is only $2,200. So I'm making $58 on a $2,200 transaction. Well, how many of these can I do? Think about it that way. That's an interesting way of looking at it. I'm a ticket scalper. Somebody goes in and they buy a whole bunch, and he goes on the street corner. Hey, I'll sell it to you. Same price I just paid for it. $22.50. I'm going to sell it for $22.50, and someone is going to pay me $58 per contract to buy it from me for the exact same price that I just paid for it. And I'm perfectly okay with that, especially because Harley Davidson is bouncing off the bottom of the year. We got 2 days to the upside. Well, tomorrow will be day number 3 if it does it. Well, that works for me. All right, so let's do the numbers. For that, we're going to need the calculator. Okay, so we got 58 divided by 2192. 2192, 2.6%. Why not? Think about it. While this is setting up, I'm going to ask you a really good question. As a company has been in business for over 100 years, if I make 1% every single week, okay, 1% a week is over 52% a year, simple interest. But 2% a year, come on, that's got to be 100% per year. All right, so here we go, Harley Davidson. Move that out of the way. Harley. Whoa, that's way too big. Here we go. Harley Davidson. Okay, HOG, Harley Davidson. That's the wrong one. Okay. 19 December. That's next Friday. The 22.5 call option. Now, I sell options. I don't buy them. 80% of all options expire worthless. So why would I want to buy something if there's an 80% chance that I could lose? Okay? I don't ride that edge of the knife, you know? So here's the cost of the trade, including commissions and fees, $2,200. It's 2.6% for 1 week. And I know a lot of you probably thinking, that's not a lot of money. Well, for those of you who think it's not a lot of money, you're definitely in the wrong place. Okay? Because I'm investing for weekly cash flow. I'm not investing for capital appreciation. Now, some of you younger folks, well, hey, great, you want to do it, wonderful. Do the strategy, let it compound. What's wrong with compounding at 50% a year? Not wrong with that at all. That's not what I do, because that 1% a week, yeah, that pays for my bills. I'm sorry, I'm retired. Okay, I'm retired. My money's got to come from somewhere. Okay, I'm just starting the paperwork process for the Social Security, which I'm eligible for next month. So no, I don't work anymore in the traditional way. I mean, I was working today, putting the ceiling in, had a boat emergency. You ever get a phone call from the marina? Hey, your boat's taking on water. Get your ass down here. Yep, that happened this morning. Hey, my life's exciting. I have an exciting life. Anyway, so 2.6%. Why the hell not? And it's Harley Davidson. It's not some obscure company you've never heard of before. And almost everybody's heard of Harley Davidson. 2.6. Why not? Why not 2.6% per week? Now, for those of you that are in the wrong place, hey, it's a possibility, something to think about. Okay, now being retired, I got, the whole day to do whatever I want. Now, I understand some of you folks that are still working, you say, well, I don't have that kind of time. It's only 5 or 10 minutes. 5 to 10 minutes to cultivate, manscape, what do you call it? Landscape, take care of your money. Most people spend more time planning a weekend getaway than they do on their personal finances, which are supposed to take them into their retirement so they can live a nice, happy, lovely, comfortable retirement. Well, that's where I am. I'm perfectly happy right where I am. But what I don't have, some people ask me, why do I keep doing this? Well, I'm doing this for my kids and my grandkids, so they will have something to go by. Because when I'm gone, 10, 20 years from now, at least all these videos will still be here for my children, my grandchildren, my great-grandchildren, so they will know what to do with money once they get it. Okay. Righty. So I like that one. Let's look at something else. What do we have next? Delete that. Let's get out of that. Let's go back to here, and we're back where we, oh, wait, no, we're not. Now we're back where we started from. Chuck, how you doing? Paul, Silver Eagle, Zstenic, okay. Oscar, what's going on, Oscar? Mike in Love, how you doing there, Mr. Mike? El Pablo. What's up, Jimbo? Holy shit, my aunt is the only one who ever calls me Jimbo. I think like 3 people in my whole life has ever called me Jimbo. Whatever. Ken Ray, how you doing? Parrish, how are you? Joe Christie. HL doesn't have weekly options, but sheesh, I'm up 60% on my March call option. Okay, Joe, that's awesome. It is. Okay, it's easy to make. I tell people this all the time because it's easy to make money when the market is in a what do you call it, a bull market, just like a lot of stuff go. Now, see, I don't know, because some people say one thing and then something else happens. Well, we've been making money hand over fist all year long and all last year too. Okay, so I'm doing rather well. I make my 1% every week. I'm okay with that. It's 50% a year. So now Joe, I understand the HL doesn't have options. So, yeah, it's not something I would be interested in. The only reason, because if it has no options, how am I going to make weekly cash flow from it? That's what I'm looking for. I'm not buying a stock, just let it sit and have it go up in value. That's not, no, because that doesn't help me paying my bills. Richard, Cranium, Raya, you got to give me the ticker symbol, dude. Is that actually a ticker symbol? Raya. Raya. Hell no. No options. No options, no thank you. Jelly, what's going on? Oh, Z558. How you doing? Denise, how are you? Greg? What Meta going to do tomorrow? Don't know, don't care. Meta is not on my list. Okay, the reason why Meta is not on my list, they've only started paying dividends recently. What are we at, to 2 years now? Why would I be interested in it? Look at the chart. What does it tell you it's going to do? Down, up, down, up, down, up, down. That's what it looks like. Is that what's going to happen? Well, you got this big gap right here. That's going to fill eventually. Okay, up, then down. So she goes from 580 to 680. That's $100. Now she goes from 680 down to 640, which is $40. So could it be turning there? I don't know. I personally don't care. I don't buy stocks that don't fit what I'm trying to do. Meta's not one of them that, no, it's just, no, not for me. Anyway, let's keep on going. Reckless Town, what's going on? Cave in, what's going up? What's going up? Having monthly pains with MOS. I'm in at 30.50 and need to find a way out without taking a loss. Okay, Van. Uh-oh. I'm going to get to that in a second. I missed some. And we don't want that. Okay, Roberta, how are you? Suzer, Dylan, Melissa, Patrick, Velimir, Jason, and Jack. Okay, Christopher, Kator, Gina. Oh, my Evie, Yana. Okay, can you look at these two for me? Oh, Procter & Gamble and Abbott Labs. Oh, but of course I can. I love Procter & Gamble and Abbott Labs. Procter & Gamble we looked at last night, and it looked really good last night. Yeah, and it's even looking better today than it did last night. So let's take a good look at it. Here's the top. Here's the bottom. Here's where it was. Here's where it is. Look at this. Sideways, down, up, down, up. So we're at 140. The 141 is going for 142. I still like it. Do you like Procter & Gamble? The company's been in business for over 100 years. They are considered as a dividend king, which means 5 decades. That's 10, 20, 30, 40, 50. 50 years of increased profits year after year after year. More money, more money, more money, more money. Why not? Think about it. Why would you start a company that's not looking forward to make a profit? Well, isn't that what companies are doing? To hire people to create more product, make more cash flow, so everybody wins, everybody's happy. Why not? Okay, so let's take a closer look. Requires glasses. All righty. A year ago today, we're sitting at 171.66. We hit a double top in March. 179.90. Okay, we just slow downturn until we find the bottom. Look at the last 90 days. Where is it? Right about there. Last 90 days. Nothing but down. That's easy to see. You can see all the small moves in between, but it's all the same. She was here. Now she's down there, bouncing off the bottom on Monday. Monday was the bottom. Tuesday's higher. Wednesday's higher. Today was higher. That's What I'm looking for, the bottom, that's a bottom of the year, not a 30-day bottom, not a 90-day. That's the bottom of the year. Okay, right there. 1, 2, 3. 3 days to the upside. What else are you looking for? What kind of confirmation are you? Think about this. This company's over 100 years old. Okay, they've been consistently profitable for 5 decades. Okay, they're bouncing off the bottom of the year, and we got 3 days to the upside. Look at where the high is, 162. Look at where we are now, 142. We got all this space up here to go before it challenges that high. Well, you have to ask yourself the question, do I like Procter & Gamble? Let's find out. All righty, 141, right there. Okay, just do one contract. I don't want to scare people away with all that money that required, even though the percentages are the exact same. Let's check it out. Buy one covered call, Procter & Gamble, 19 December, that's next Friday. The 141 call option against the stock at the market. Well, maximum profit is 172.50. Now, remember when I said I'm looking for a simple, safe, predictable, and consistent strategy? Well, I know what I'm going to make before I even enter this trade. And then I ask myself, do I like Procter & Gamble? Does this trade make sense to me? It either does or it doesn't. That's what I'm looking at, 172.50 with a $14,000 investment. So let's check it out. What is the calculator telling us? Okay, 172.50. I'm going to divide it by the cost of the trade, including commissions and fees. It tells me everything I need to know right there before I even do it. Think about that. You're going to make an investment. Well, I know what the profit's going to be before I even do it. Well, that makes sense to me. Okay, so profit 172.50. It's going to cost right around 14,000. That gives you a grand total of 1.23. That's 1.25%. Do you remember a couple of years ago when CDs were paying 1.25% for the year? Well, this stock here with this trading strategy is giving me 1.25% for just 1 week. Well, I'd say sure. I like Procter & Gamble. Why not? $1.23. Procter & Gamble. Yay! The crowd goes wild. All right. You have to wow. Oh, come on. There it is. Right there. There we go. 1.23. All right. Procter & Gamble. Here we go. Procter & Gamble. 19 December. The 141 call option. 172.50 is the profit. Remember, simple, safe, predictable. Well, predictable, I already know what I'm going to make before I do it. Most people buy a stock and have to wait to see what it does. I don't want to do that. Okay, I really value my time. This trading strategy, I can get in, I can get out in less than 10 or 15 minutes. And if I'm making 1% every single week, I know don't sound like much to you guys. But hey, I'm retired. 1% a week comes over 50% per year. All right, so my little nest egg gets me more than I need on a weekly basis to cover my bills. Isn't that what everybody aspires to when it's time to retire? Kick back, do whatever you want, have enough money to do whatever you want, go out, hang out with the kids, buy the grandkids stuff, go places, do things, not have to worry where the next rent check is coming from or the grocery bill money's coming from. Why are you doing this in the first place? The why you're doing it in the first place is probably going to be more important than to what and how. Why are you doing it? Why are you here? Spending the one commodity that is irreplaceable. No, it's not money. It's your time. You cannot replace your time. Okay, so what are you doing? Are you trying to buy back that time? Well, that's what I did. Okay, my first job was in 1974. I worked on a farm with old man Simmons. Me and my friend Bruce, we would go, yeah, we would jump on the school bus in the morning, and we wouldn't go home until after dark because we didn't go home right from the school bus. The old man Simmons picked us up right off the school bus, and we went to the farm and we worked until it got dark, and then we came home. Well, that was the 70s. No, you could do that back then. All right, so 1.23% for Procter and Gamble. The company's over 100 years old. Why the hell not? 1.23. 1.23. Awesome. Procter and Gamble. Yay! All right, so let's get out of this one. And back to the beginning again. What else do we have? Ooh, Abbott Labs. How about it, Abbott Labs? I'm not 100% sure if they're a dividend king or not, but I think they might be. They might be a dividend king also. All right. ABT. ABT. Interesting. Dude, that's two good ones in a row. Nicely done. Here's the top. Here's the bottom. Here's where it was. Here's where it is. Look at this. Up, sideways, down, and then up. It's bouncing right off of there. Okay. Okay, the last 90 days. Last 3 months. Top, bottom. Where was it? Where is it? Up, down, up, down, up. Now, it bottomed out yesterday. Okay, so not that attractive today for those people who like to play bottom. If you think this is the bottom here, it only has 1 day up. Okay, so it bounced, hit the bottom here yesterday. Today is higher. Okay, could that be the turning point? It could be. There's no guarantee. There's only 3 guarantees in life, and this ain't one of them. Okay, the 123.28. Well, let's take a look. The 123, okay, the 123 is going for 158. Fine, let's do it. That's probably another 1.25. Let's take a look. Last 30 days. We want, here we go. Here's your last 30 days. Okay, up, down, up, down, up. It's, all right, see, people think it is silly how I do this, but you got to remember why I created, because why is always more important than what and how. Why am I doing something? Well, the reason why I'm doing this is because my 9-year-old daughter asked me, say, Daddy, can you teach me? So how does a dad take a look at his little girl and say, no, I can't, no? Because most adults don't get it. How am I supposed to teach a 9-year-old? So for my 9-year-old daughter, simple, safe, predictable, consistent, and trust me, at 9 years old, anybody, up, down, up, down, up. Anybody could do that. Hell, my 5-year-old grandson could do that too. Up, down, up, down, up. Well, it's going up at this moment in time. The 30-day top right there, 30-day bottom right there. We're here. So we have between here and here. That's how much space we have to go. If you think you like this company, Abbott Labs. Let's check it out. Let's check it out. Let's see what happens. All right, covered calls. The 123 right there. Here we go. One contract and market, and there we go. Here we go. Here's Johnny. Buy one Abbott Labs ABT. 19 December. That means this option is going to expire next Friday, 3:59 p.m. Okay, because at 3:40, 3:59, yeah. At 4 o'clock, it closes. Market's done and over with. 19 December next Friday, the 123 call option. Well, the stock's at 123 at this moment in time. Okay, so if the stock's at 123, this is almost the exact same as the trade we just did. I'm buying it at exactly 123. I'm selling it exactly 123. I'm selling the contract for someone to buy it from me, and they're going to pay me 167 for 1 week. Well, let's find out what rate of return that is. Okay, so it's 167 is my profit. Remember, I'm looking to know what my profit is before I even do it to see, is it financially feasible? Does it make sense for me to do this trade? Well, I already like Abbott Labs. It's on my list, so I don't mind buying it. It's just, where is it now? Because stocks go up, they go down, they go up, they go down. So am I catching it as it's bouncing? It's like a ball. You throw a ball in the air, it goes up, it's going to come down. Once it hits that bottom, it's going to shoot back up again. Well, that's exactly what Abbott Labs is doing at this moment. Well, at least that's what it looks like. All right, we want to divide it by the investment. 12,133. 1.37. Well, I love Abbott Labs. Well, let's find out. Abbott Labs. 137. Come on. There it is. Here we go. Abbott Labs. 19 December. That's next Friday. The 123 call option. Okay, 167 is the profit, 12,000 is the investment. That means it's 1.37% for 1 week. If 1% a week is 50% per year, well, 1.3 has got to be more than 50% per year. Do you ever enter an option position through a cash secured put? Andrew, yes, I do. Once in a while. All right, hold on. Okay, right there. Okay, check VAC, not sure about weekly options. Okay, now Snow Miser, you do know that rule number one, never buy something you don't understand or you don't want to hold on to. Well, rule one is never buy something you don't understand. If you're not sure whether it has options or not, why would you be buying it? Why are you putting your money into something you're not sure about? It's actually plain and simple. So you should know exactly where your money's going. I mean, wouldn't that be nice? This is what I'm buying. Okay, who is it? What is it? What do they do? And is it something that I can hold on to for the long term? Depending on what you think long term is. Me, long term's 30 days. I'm 60, 61. I'm going to be 62 next year, which is only a couple of weeks away. So, that being said, let's go. And what was this one? 137. 137. Gotta love it. Next. What do we got next? All right. Can you do UPST? Isn't that Upstart? Why am I doing Upstart? They haven't been around for 20 years. Seriously. Have they been around for 20 years? Have they been consistently profitable for at least 2 decades? I don't think so. Let's find out. UPST. UPST. Okay, nice bounce, but I don't think it's got a good idea for this week anyway. Who came up with that one? UPST. Invictus Trades. Invictus. Okay, don't get me wrong here, Invictus. It looks interesting. Here's your high right there. That's back in February. We bottomed out at TDS. Okay, that's in April. Okay, a year ago we're at 75. We shoot up to the high, 96, drop down to 31, shoot up to 90, drop to 35. Now we're at 49. Now it looks interesting because the top is here, bottom's here. Now we're going up. Yeah, not so fast. Hold on. Let's zoom into that. Let me show you something you might be missing. Here we go. Here's your top. Here's your bottom. She drops. Now she goes back up again. Well, let's zoom in a little bit closer because I don't think you're quite seeing what I'm seeing. Okay? The bottom, 34. The top, 49. Now do a little bit of math in your head. From $34 to $49. 34 to 49. 34, 49, 34, 49, 34, 49. That's about, what was that? $15, right? Okay, 15 bucks on a $34 stock, not quite 50%, probably closer to a 45%. So she jumps up over 40% within the last couple of weeks, and you think it's going to keep going up? I wouldn't touch this one. It's up over 40%. Okay, if you really like it, okay, wait for the pullback, then jump in for it to keep going. Okay, if you want to jump in and have something drop like a rock, yeah, buy it at the 30-day high. Then she's going to plummet normally. Anyway, I'm not even going to entertain that one. It just doesn't make any sense. Thank you for that, Invictus Trades. Outmoded. Cool. Greg, Greg, is that actually a ticker symbol? WHTS. What's free technology? Okay, no. That's a no. Doesn't even show up. Reckless Town. What's happening? Christina, Gen X, how are you today? Christina, Gen X, where are you? Where are you? Where are you? Oh, I missed it. Can I say hi to my wife, Sherry? Yeah, let me go get her. She's in the other room. I have no idea, dude. All right, hey, man. Christina, Gen X, no Zoom? Did I even do the Zoom today? Okay, let's do this. You guys gander upon this while I take care of this scenario. Yeah, these are the picks we had come out this week. Now, no, they are not stock picks. It's not advice. It's not a tip. It's just what you guys came up with. So you do that while I'm doing this. There's 9 in progress. Huh. Okay, clear that. I've got to go home. Here we go. Here we go, yo. All right, give me a couple of seconds. I'll get this sorted out shortly. 9:30. Yeah, we'll do that one. We'll do this. Okay, and we'll do this. All right, right there. And start. And camera. There we go. Okay. No, that's not right. Copy invitation. That's what I was missing. All right, copy invitation. Get rid of that one. And there we go, Christina. It's on the way. Tra-la-la, on the way. All right, cool. All right, so let's go back to, here's where we are. All right, let's do this all over again. Okay, Christina, it should come to you any second now. Just got the number 3 gifter. Yay! Rob, I'm new when you say options, not all stocks have options. Absolutely, Roger. Rob Ragnar. Okay, so Rob, not all stocks have options. And some stocks that do have options, some of them are weekly and some of them are monthly. Okay, meaning you can do some on a monthly basis and you can do some on a weekly basis. Okay, no options, no thank you. No weeklies, no thank you. Okay, Eddie, ACMR. What is that, Eddie? AMCR. Amcor. What the heck is that? It's a monthly. December. No, wait a minute. December, January, April, June, July. Yeah, no. Sorry, Eddie. I don't do monthlies. HL has weeklies. Joe Christie. What the hell is HL, Joe? It's a hell no, Joe. Now, Joe, the reason it's a hell no, I have no desire to buy anything at the high, especially this baby's at $4, $5, 4 or 5 months ago. Okay, it's $5 4 or 5 months ago. Now it's almost at 20. So it goes from $5 to 20. That's not a 100% increase. That's not a 200% increase. That, my friends, is a 300% increase. And you want me to jump into that? Hell no. Hell no, Joe. All right, Procter & Gamble. Okay, VAC. I'm not even going to do that one. I have Abbott Labs calculated next week at 1.5 and Procter & Gamble at 1.6. Awesome. Foo-foo, good evening. How are you today? Okay, Scalptimus Prime. Just a tip. SLV is what you should be in. Calls or shares. Okay. Scalptimus Prime. SLV. SLV. Hell no. What the hell are you thinking, brother? This thing at 57.62. I honestly don't care where you think it's going. Okay, it was at 27 a couple of months ago. Now it's 100% up, and you think it's going to continue going? It just might. You do it with your money. I don't make speculations like that. I never ever buy at the high of the year. I don't care who tells me it's going to go up. I don't care if the president of the company or even the vice president, hey, I got a great tip for you. Buy SLA. No, dude, I don't buy at the high of the year. No, 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 no. Next. The real global JT. What's happening? Great content. I have a question. What is the downside of selling calls? Well, here's the interesting thing. The downside of, the question is almost complete. All right. So when you say selling calls, well, you didn't add a lot of intricate moving parts. Are you just selling calls? And by just selling calls, that is called naked selling, which means you're trying to sell something you don't own. That's very risky. I don't do that. I buy the stocks first, then I sell the calls, which is an option that allows someone to buy it from me at a certain price by a certain date, something I already own. So are you talking about that, or are you talking about just selling calls? Because calls in and of themselves with nothing backing them, that, my friend, is risky. Okay? So if you're going to ask a question, and this is a good example too, because it's a good question, but there's always ways of making the question better. Okay? A better question will basically give you a better answer. A better answer, believe it or not, is going to give you a better life. Seriously, as silly as it sounds. You ask a question, you can get an answer. You ask a good question, you're going to get a good answer. You ask a great question, you're going to get a great answer. And you ask a question that will change your life, trust me, the answer will change your life. But you got to have a good, and it was a good question, but you're missing a few very important parts that could change the total direction. So what's the downside of selling calls against stocks that already have a 20% increase, blah, blah. The more you add to the question, the more you isolate factors inside the question, the more you construct the question to give you an answer that is good and solid. Well, hey, that's a great question. But just to ask selling calls, well, it's missing a lot of parts. But the way you're asking it, that's too risky. Just selling the calls. Okay, a covered call is a total different story, but just selling the calls with nothing to back it up, that's very risky. Okay, Mary, hello. All right, let's keep on going. Who do we have down here? Down here, come on down. Who do we got? Who do we got? Who do we got? John Warner, how are you today? John Warner would like to take a look at Nextera and EE. Well, let's check it out. Interesting. Your top, your bottom, where was it? Where is it? Look at the motion. Sideways, up, down, up. Okay. It looks interesting. The last 90 days. Up, sideways, down, up. Okay. So we bottomed out Tuesday. Wednesday was higher, and today was higher. So that's 2 days right there. Look at where the high is. Look at where we are now. So we have between here and here. That's plenty of room. See, I always like to take a look at where is the stock now? right here. Where's the high of the 30-day period? The 30-day period would be here. So let's zoom into that. Okay, here's the 30-day period. Okay, up, down, up, down, up, down, up. Okay, sideways, down, up. All right, basically the same thing. The 30-day top right here. 30-day bottom right there. We're here. We have all that space. That could be a very good trade. Let's take a look at it. Who came up with this one? Who came up with next era? Johnny Boy did. John Werner, thank you. Let's check it out. Let's check it out at 80. Oh, see, this is a tough one. Okay, because the stock is currently at 81.54. It's almost in between the 80, wait a minute, the 81 and the 82, right at the money. See that? See that? Right at the money. Okay, so am I going to go towards the 81, which is a safer trade, or do I want to do with the 82, which is a little bit more profitable? Let's look at both of them. Look at the 81 and we'll look at the 82. But keep in mind, at 81, that's already in the money, which means that is the safer bet. The 82, which is, like I said, right in the middle. So halfway to 81, the other halfway to 82. But the 82, the stock does have to go up. See, stocks go three different directions. It goes up, it goes down, and sometimes it just goes flat or sideways. So in the money, the 81, okay, if it goes up, I'm great. If it stays the same, I'm great. It can even come down a little bit and I'm still good. Okay, that's in the money. Now, out of the money, if the stock goes up, then I'm good. If it stays the same, I'm not good. If it goes down, I'm not good. But it's still a company that I would like to buy and I like to hold on to. Okay. ACMR. Eddie Morales, how are you today? Okay, Eddie, we'll take a look at ACMR. I have no idea what that is, Eddie, but we'll take a look at it in a minute. So anyway, we're going to do this twice. We're going to do the 81 and we're going to do the 82 just to give you an idea of the difference between the two. So let's check it out. All right, let's go. Covered call. It's going to do the 81 first. Just one. At the market. There we go. And here it is. Okay. Now remember, this is the 81. Okay. Buy one covered call next hero. 19 December. That's next Friday. The $81 call option. Okay. Max profit 101. Investment 8,000. Well, let's find out what that profit margin is. Well, that profit return is. Okay, so 101. Try it one more time. 101. There we go. Okay, I missed that one, but okay, thank you. All right. Uh-oh, wow, I missed all these. All right, right there, right there, right there, right there. Okay, sit tight, hold tight. Okay, so 101 is the profit, and we want to divide it by the investment, which is 8 grand. Okay, it gives me a grand total of 1.26. Okay, so let's save this one, 1.26. All right, 1.26 for this one. NEE, 19 December. The 81 call option. 101's the profit, 8 grand. All right, $7,999.66. Come on, that's close enough to 8,000, isn't it? We can let that slide, can't we? All right, so if you like it, that's a big question. Do you like this company? Is this a company you can see in your portfolio and say, yep, this baby gives me something every single week? All right, so we said it was 1.26. All right, we'll put this one right there. Okay, 1.26. All right, 1.26. Now we are going to do the 92. Is it what, the 82? Which one is it? The 82. We did the 81. Now we're going to do the 82 and see which one makes more sense. Okay, edit this. Change it right here. See, all I'm doing is I'm just changing the strike price right there. I'm not changing anything else, just the strike price. Going from 81 to 82. Let's see what kind of a difference it makes. And here it is. Buy one covered call, Nextera, same company, 19 December, the same strike date. Okay, the 82 call option. So we're changing the strike price. So every time you change the strike price or the strike date, it changes the whole equation. What am I getting? What am I paying for? All right, so profit is 152. And this time we're paying $8,048. So it's a little bit more money. Okay, so let's find out that rate of return. 152 is the profit. The investment is $8,048. Okay, that's 1.88%. So you see the difference? So let's pull it up and you'll get a better idea what the difference is. Come on. There we go. All right, so let's pull it up. There it is right there. All right, so let's do this. Let's do this one right there. And do this one right there. All right. Okay, basically the exact same thing. Okay, buy one covered call, NEE, that's Nextera, 19 December, okay, that's next Friday, the $81 call option. Okay, this is almost the exact same thing. Buy one covered call, NEE, 19 December, same thing, but the 82 call option. A little bit different. Okay, so this one is 1.26, and this one's 1.88. But the top one, stock doesn't have to do anything. It can stay exactly where it is, and I'd still make my over 1%, which is my goal. Safer and still over 1%. Now, if I wanted a little bit more money, 1.88, I can go to the 82. But the stock would have to go up between now and next Friday. Well, isn't it going up anyway? So that's one of the dilemmas you have to choose. Do you want safety, do the 81, or do you want more profit and do the 82? We're going to save both of these. Maybe not. Let's try that one more time. I hit the button too many times. Hit the button one too many times. All right, this is 1.88. All right. $1.88. All right. So this is the 81, and this one is the 82. Wow, made the 8 backwards. Anyway, so let's find something else. Now we have plenty of time. It's only 9:53. So Eddie, ACMR, Eddie, what is that? Seriously, Eddie, I have no idea what it is. Okay, get this back to where we want. Oh, wasn't that like Mick Jagger? Get back, get back, get back to where you once belong. Get back, Loretta. Your mama's waiting for you. The high heel shoes and a low. Hell no! What the hell is this? December, January, February, May. No, I don't do monthlies. Come on, Eddie. Weekly options only. Never buy something you don't know, you don't understand. Why are you putting your money into something you don't know? If you knew it, Eddie, you wouldn't suggest it because I don't do monthlies. They're just nothing but a waste of my time. And now other people's time. Thanks, Eddie. Great content. I have a question. We already did that one. Cave in. Having monthly pains with MOS. Let's check it out, Eddie. MOS. I said that MOS, a TER, a G with a double E. Now, cave in, you've been here for a while. So I'm going to pick on you and I'm going to make fun of you, brother. Okay, I told you the first time you came here, I don't do monthlies, and there's a reason why I don't do monthlies. Okay, so you're here at Mosaic. Okay, here's the top, here's the bottom. Drop. Now she's going back up. She's at 21.9. She's at 25.19. You said you're in at 30. Dude, this thing hasn't been 30 since October. And then she dropped. Why you bought a monthly in the first place is beyond me. Because you've been here for more than a month. So the issue you're having, okay, fine. You're in at 30, great. If I was in at 30, okay, now we're bouncing off the bottom at 25. I jump in dollar cost average and bring myself right to here, the 27 area. That's what I would do. However, I can't tell you what to do. Do I ever buy options back after selling? Once in a while I do, if everything looks right. Adventure Jeremy, how are you today? Andrew, do you ever enter an option position through a cash secured put? Yeah, once in a while. Wait a minute, an option? No. I enter a stock once in a while through a cash secured put, but not really an option. Sorry, just joined. So what type of stocks are we looking at? Stocks with dividends. Absolutely. Now I'd call you up by your name, but X4455 Stacks. Well, I'll call you Stacks. Okay, so Stacks, what I'm looking for are companies that are consistently profitable and have dividends, specifically increasing dividends. So we're talking about stocks like the Dividend Kings, the Dividend Aristocrats, the Dividend Champions, the Dividend Contenders, and even everything on Warren Buffett's list. If it's profitable and it has a weekly option, I'm interested in it. Other than that, no thank you. Now there's 10,710 different companies just this week. Out of all of them, I only look at about 300 because I don't know who can look at 10,700 stocks every single week. I can't. I have no desire to because I'm not really interested in making that much money. I make plenty. 1% a week is plenty for me. I'm not greedy. I want to get in, I want to get out, and then I want to do absolutely nothing if I feel like it. All righty. All right, Rob, FISV. Interesting. FISERV. I have no idea what FISERV does, so it's not something that I normally would do. Okay? Here's your top. Here's your bottom. Here's where it was a year ago. Here's where it is now. Look at this. Sideways, up, down, sideways, down, sideways, down, sideways. What's going on down here? Let's try that one more time. Okay, I'm going to say no to this one. Okay, Rob, this is why I'm saying no to this one. You ready? Okay, you get your 30-day top today, your 30-day bottom 3 weeks ago. 30 days ago, we're at 64. We drop to 60. We shoot up, go sideways, then bump up again. Yeah, I don't buy anything at the high. Okay, now I buy on a weekly basis, Monday through Friday, Monday through Friday. So I look at the last 30 days. Okay, the last 30 days gives me a good idea of where do I think it's going to be by next Friday. That's my main goal. Where do I think it's going to be by next Friday? Well, this one the way that it looks, down, up, sideways, up, it looks like it might be ready for pullback because it went from 60 to 68. Now, who can add that fast on their head? 60 to 68 is $8. Well, $8 on a $60 stock is about 12%. Okay, it jumped up 12%. Why would I jump into anything that's already up 12%? Okay, I'm only looking for 1%. I jump in, I get out. I don't want to wait around. Now, this may be appetizing to some of you people. And don't get me wrong, a 10% jump is nice. But with that comes risk. I'm at the point in my life where I don't want any risk. I want to have as zero amount of risk as humanly possible. So I don't do trades that are already up 10% or over 10%. Okay? Stacks, Coca-Cola. We looked at Coca-Cola last night. It was a no last night, but hey, it's probably going to be a no tonight also. Okay, it dropped. No. Wasn't that quick? There's the bottom. It went up, and now it's back down again. No, not until it finds the bottom. Okay? Now, it's going to find a bottom eventually and turn around and go back up. But until then, no. Maybe we'll look at it next week. So we'll write it down for next week. See what happens. All right, what's next? Thank you. I think I'm getting the hang of it. Well, you're relatively new here. Don't feel bad, okay? Took my 9-year-old daughter 15 minutes to grab it because everything was laid out for her. Never buy something that's not on the list. So I created the list for her. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. So she had a list of 300 stocks. But what else did my 9-year-old daughter have that you don't? Well, I don't know, but here's just a thought. Okay, so I created the list myself for my daughter. So rule 1 was never buy something not on the list. Okay, and then the list, I throw it into a calendar. The calendar tells me when is the company going to pay their dividend. Well, now you're probably thinking, why is that important? Well, here's the thing. Okay, when a stock is getting ready to pay a dividend, first of all, a dividend is a portion of the company's profits that they share with the investors. And guess what? If you're here on a stock investing website or a show, whatever you want to call it, we don't know what we want to call it yet, but still, you're here, you're probably looking for the same thing we're all looking for. A way to increase the money that you have in your retirement account or your savings account or whatever. We're all looking for the same thing, to make a little bit of money. Well, I'm looking for a little bit, 1%. So why do I use the calendar? Because just before the dividend is paid, the stock has a tendency to go up in value. So by knowing when they're paying their dividend, and I buy the stock before they buy their dividend, just before the stock goes up, well, that's a little tidbit of information that could be helpful. All right, so the EX dividend calendar tells me when companies are paying their dividends. Each one of these little green circles, okay, green dots, represents a company. MDT, Medtronics, Albemarle, Walmart, Pepsi, Kimberly-Clark, McKesson, Cincinnati Financial, T. Rowe Price. Okay, you probably heard of almost all those companies. Okay, K-Van, if I lower my strike on MOS from 30.50 down closer to the money, can I roll back up in the same month? You can, but it might cost you. But when you're rolling it down, when you move the strike price down, you're getting a higher premium. And that premium, you might have to give it back to move it back up again. I just don't do monthlies because you got to wait 30 days for it to get back to a position where it's like, okay, what's going on here? Anyway, next, Dave Biggs wants to take a look at Circle. Why? Why, Dave, do you want to look at Circle? CRCL. Okay, interesting. Top, bottom, Where was it? Where is it? Look at this. Up, down, sideways, down, up. Okay. What's your last 30 days look like? Because the last 30, let's look at the last 90 days. Okay. Last 90 days. Top, bottom. Now she's going up and actually slowing down. Well, it's not bad. The 88.50, the 88 is going for 4, the 89 is going for 350. Well, you may like it, but I don't even know who Circle is. No idea. Let's find out. All right, the 89s. There it is right there. Covered call. 89. Here we go. And just one at the market. There we go. And here's Johnny. Boy, buy one covered call, Circle. 19 December. That means this option is going to expire next Friday. The $89 call option. $396 is the profit. 8,500 is the investment. Well, just by looking at those numbers, this thing doesn't have any dividends. More than likely, we could go take a look. Let's take the calculator and see what it looks like. 396 divided by 8504 gives us a grand total of 4.6. If you like this company. I don't know. I've never bought it. There's probably a reason why I've never bought it. It probably doesn't have any dividends. If it doesn't have any dividends, I won't buy it. Sorry, it's me. Here it is right here. Circle. There we go. Circle. CRCL. The 19 December, the 89 call option. 396 is the profit. 8,500 is the investment. Do you like it? It's 4.6%. 4.6% for 1 week if you like this company. All right, fine. All right, it's not cooperating. I hate it when it doesn't cooperate. It does it once in a while. A little glitch in the system. I don't think anything new. I don't think any new tech is glitchless. That's a good one for it, isn't it? Glitchless. Glitchless. Here we go. All right, what was it? 4.6. Whoops. 4.6. Well, what do you think of that? Never did Dow. Okay, we did Dow yesterday. Ruben, thoughts on STRC? Ruben, what the hell is that? STRC? STRC. I can't even come up with anything. I'm drawing a blank. STRC. STRC. Hell no. Okay? I don't do monthly options. No, 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 hell no. Okay? 2 down auto. Dow. Now, I do own some Dow, Mr. 2 down auto. Look at this. What's going on right there? Here's your top. Here's your bottom. Look at this. Nice support here. Once, twice, 3 times. Top, bottom, sideways, 24.50. The 24.50 is going for 65. Over 2.5% if you like Dow. Now I do own some. We did take a look at the other day. What do we have over here? Okay, so everything makes sense. But what happens when the market crashes and you are holding the bag on all of these stocks, say for insurance, for instance, edge case like. What the hell is edge case like? Why would I buy something I don't know? Edge case, never heard of it. Okay, so here's the issue that you're having. Okay, for some strange reason, and you need to explain this to me in a manner which I'll understand. For some strange reason, you think that something is going to happen in the economy or in the world that has never happened before. I hate to be the bearer of bad news, but market crashes happen every 10 years. Every decade, there is a market crash. A market crash, a market correction, a pullback, whatever you want to call it. What goes up must come down. There's no way around it. Okay? So if you buy something, okay, market crashes, well, yeah, the stock price is going to go down, but what's not going to go down is the amount of shares that you own. So if I buy Dow at $42, right? Because somebody bought Dow at $42. Now it's down to 24. Okay, that's a 50% drop. Is that what you're talking about? A 50% drop from 42 down to 20? That's 50%. Now, if, hypothetically speaking, I got 500 shares at 42, now I lost 50%. I didn't lose any money. I lost 50% of the value. That's all. The stock price went down, but I still have the 500 shares. I buy 500 shares at 42. It drops down to 20. Okay, it dropped 50%, but I still own the 500 shares, which means I can turn and I can sell at the money, in the money, or out of the money. It doesn't matter what I paid for it. If I own 5 contracts or the ability to have 5 contracts, what I paid for it is irrelevant as long as I never sell for less than what I paid for it. So if I bought it at 42, now it's at 20. I'm going to sell something like the 24s or the 23s, something like that, far enough away from where the action is, which is at the money, far enough away where I have income coming in. So even if the stock drops, I still have the ability to collect the dividends, which is why most people buy stocks in the first place, to get a share of the profits. So the dividends are going to keep coming in, whether I bought it at $100 or whether I bought it at $5. As long as I own that little piece of paper and never, ever, ever sell it for less than what I paid for it. If I paid 42, I'm not going to sell it at 20. I'm not going to sell it at 24. The stock can go up 50% from where it is, and that's only 36. I wouldn't sell it there either. Because if I'm in at 42, there's no way I'm ever going to sell it for less than 42. That's just me. I don't like taking losses. I've done over 2,000 trades this year, and I only have 4 losses. So far this year, that's it. Only 4 times this year, I didn't make my 1%. Last year was about 3 or 4 times also. And the year before, it was about 2 or 3 times also. But for the most part, I like to play it safe. It's the 5 criteria: simple, safe, predictable, consistent, and no way for me to lose. Now that 5th one always gets everybody. What do you mean no way to lose? Well, unless you believe the federal government and that what do you call it, that magic bullet bullshit, I honestly don't think Coca-Cola is going to disappear overnight. I don't think Dow is going to fold up and just call it quits after 100 years of being in business. I haven't heard anything about them being in trouble, so why would I even think that they could disappear overnight? Now, if you believe the federal government, all the crap that they feed us, yeah, it could disappear overnight. I seriously doubt it. But, I don't doubt, don't even get me started with those people. COVID, do you just hold until everything recovers? No, because while I'm holding, I'm still creating cash flow. Even if the stock drops, I'm still creating some cash flow. Faber, how are you doing? Pronounce the A as an app. Okay. Saffron. Walgreens. Holy cow, we haven't done Walgreens in a while. WBA. See, Walgreens got bought out. And when they got bought out, they went to monthlies. So yeah, I don't do Walgreens anymore. Now, we made a whole bunch of money on Walgreens last year and the year before and the year before. Well, this year, they got bought out. So we don't do it anymore because it's not profitable anymore. Sorry. Nail. What the heck is Nail? Nail. Direxion Hammer, blah, 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 ETF. Yeah, I usually don't like these ETFs because they usually don't have dividends. Usually. Let's check out this one. Here's your top, 130. Here's your bottom. Okay, I forget who asked about this. What happens when the stock drops? Do you mean like from 130 down to 40? That's a $90 drop. $90 drop. Is that what you're talking about? Well, if I bought it here, now it's down here. There's no way I'm selling at a loss. I have no desire whatsoever to take a loss if I don't have to, because I don't have to. Okay, I don't need a whole bunch of money every week. Okay, my bills are relatively easy to take care of. As a matter of fact, my 1% makes more than I need. So my account grows a little bit every month, and if my stocks drop, I don't need to sell them at a loss. I refuse to sell at a loss. I'm just weird that way. Okay. All right, let's take a look. Top 130, drop down here, back up, back down, back up, back down. It's bouncing right here. What's going on right there? Let's zoom in. Last 90 days, top, bottom, where was it? Where is it? Look at this. Down, up, down, up, down, up. Here's your 2 days right there. Okay, the bottom was Tuesday. Wednesday was high. Let's zoom in a little closer. You can get a good look. Okay, the bottom was Tuesday. Wednesday, 1 day higher. Today, another day higher. Okay, so most likely the way that it looks, the top, bottom, now she's going back up again. That's what it looks like. We're at 60.58. Here's another. Wait a minute. Did you see what I just saw? They got a 61 and they have a 61.50. Let's do the 61.50. See what that looks like. Okay, covered call. Here we go. 61.50. There she be. One contract coming down. Here you go. Hey, you asked for it, you got it, Toyota. Remember that commercial? You asked for it. Okay, buy one, covered call, nail, Nail. I have no idea who they are. And no, this is not a tip. I have no idea who they are. And no, I wouldn't buy them because I have no idea who they are. 61.50 call options, 19 December. That's next Friday. 339 is the profit. 5,800 is the investment. Now, normally in my younger days, I'd jump all over this, but I have no idea who they are. How often you know what? We're going to check in a second. Let's see what the numbers look like first. Okay, 339 is the profit. Okay, the cost of the trade, including commissions and fees, 58.11. Well, let's see what that looks like. Divide 58.11. That comes to a grand total of 5.8%. Okay, now that is probably going to get a lot of you all excited. Because think about it, 5.8% for 1 week. Here she is, nail. There it is. Okay, nail. By one covered call, nail. 19 December. The 25th, that's 25, that's the year. That's the year. Okay, the 61.50 call option. Here's the profit, 339. The cost of the trade, 5,800 for one contract. Think of it as acquiring a cash producing asset, weekly cash producing asset, kind of like a vending machine, a gumball machine. If you like the company, that's always a tough one. Do I like this company? 5.8. Gotta love it. Alrighty. Let's get the chair out, answer some questions. We're ticking away on the time clock. Tomorrow is Friday. That means all weekly options are going to expire tomorrow. So I'm kind of curious what's going to happen. Okay, 2 down. Auto, we already looked at Dow. Dizzy, how are you? New Day, Car, how you doing? Game Dev Headquarters. Okay, HQ. Sell in the money and get that protection and make 1 or 2% a week. Isn't that what I've been saying? Metal Face, how are you doing today? How do you do the calculations again so I can be correct? Can you go over that again? All right. Anytime you're trying to figure out a rate of return, wow, that's way too bright, isn't it? With the calculator, what you want to do is you take whatever the profit is. Where'd it go? It just disappeared on me. All right, we got that one. All right, there it is. Anytime you take the profits. You take the profit, 339. Okay, 339. You divide it by your investment. If my investment, cost of trade, including commissions and fees, $5,811. That gives you your rate of return. Divide 5,811 gives me a rate of return of 5.8. Well, that's exactly what we said a little while ago. That just gives you the rate of return for the week. All right, next. Artie, how you doing? Idaho Viking, what's going on? Alpha Nut. Chill Will. Saiyan Vlog, what's going on? Okay, 2-5. We looked at Bull earlier during the week. Gary, how are you today? Fern, how are you? Sam of Sam. All righty then. Effie, CCJ. What the hell is CCJ? Now, you may know who that company is, but how many of your neighbors know what that is? That's probably an interesting way of looking at it. Okay, you may know who it is, but how many other people know what it is? What do we have going on down here? Next theory we looked at. Where is the NASDAQ going? Don't know, don't care. I don't pay attention to that. May I give you a great dividend stock? Probably not. The ticker is E. Well, like I said, probably not. Yeah, hell no. It's not my idea of a good stock. I don't do monthlies. It just doesn't work for me. Sorry. Steven, how are you? George, how you doing? Okay, Jay Gardner, we already looked at Nextera. What's a good dividend stock? Nextera, AT&T. That's another good one. All right. I get good dividends from BRSP. What the hell is BRSP? Bright Spire Capital. Yeah, no thank you. I don't do monthlies. They just don't work for me. Okay, you may get good dividends from great, awesome. I'm not looking for dividends. I'm looking for the money from the dividend run up. Okay, so the dividend gets announced and then the stock has a tendency to go up going into the dividend play. That's what I'm looking for. I don't want the dividends. I just looked at Nextera primarily. It looks good. It's trading near its high though. I keep an eye on it and I'm going to put it in my watch list. Thank you. Premiums come up 1.5%. Okay, so beast with me. You and I not on the same page. Okay, number one, you're in your 20s, as I recall. And number two, you're looking at things in a long-term manner of somebody in their 20s. Okay, so you're in your 20s. Long-term for you could be 60 to 70 to 80 years. Because that could be viable for you. You're in your 20s, so 60 years means you'll be in your 80s. Well, I'll be in my 80s in 20 years. Totally different way of looking at things. And you got to keep that in mind. Okay? So when I jump into something, beast, I'm looking to get in and out within a week or two. That's it, a week or two out. Then I take my profits, take my marbles, and go play in another game. Oh, Sean, hey, I work in pharma. I've seen that name before. All righty. RLC, how are you doing? Okay, Reckless Town. We already did Dow. We already did Coca-Cola, but thank you. Salami. A lot of ifs and maybes. Yeah, I love ifs and maybes because no matter what you think, no matter what you do, no matter what you say, no matter what day it is, whether it's raining, whether it's snowing, whether the sun is out, there's a whole bunch of ifs, buts, and maybes. What if I stayed in bed and didn't do anything? What if I got up early? What if I had yogurt? What if I had spaghetti? What if my fish jumped out of the fish tank? What if my car is a flat? There's a lot of what ifs. Or maybe the sun won't come up. Maybe my kids won't call today. Maybe there's a whole bunch. Okay, Sal, you really got to be more specific as to what is you're talking about because life is full of ifs, ands, and buts, and maybes. What else do we got? You guys are all quiet over here. You guys are all quiet over there. What are your thoughts on CCJ? Didn't we already say no to that? CCJ? Yeah, we did. Yeah. Okay, we already said no to this one. And the reason why we said no to this, okay, on the 21st, we're at 78. Okay, and then we jumped up to 95. So 78 to 95 is $17. 78 and 95, $17. Well, $17 on a $78 stock. Drawing a blank. It's over 20%. I think it's close to 20%. I don't know. But no, I don't buy when it jumps up that much. FE, nuclear stock and water cooling tech, next big thing. Okay, it sounds great. You let me know 5, 10 years how it works for you. It doesn't work for me. Now, FE, there's absolutely nothing wrong putting your money into that and waiting long term. Okay? Long term, in my humble opinion, is 30 days. So when you say long term with dividends, well, I'm thinking 30 days. Okay? We're not on the same wavelength. Steven, we looked at RTX last night. Bobby Donkey, how are you today? Sergey, what's going on? God knows I love TOS. So do I. Mystic Dragon, Carnival Cruise Line. Interesting. Let's take a look at that. Your top, your bottom, where was it? Where is it? Look at this. Up, down, up. That looks good. The 28s. The 28s are paying 96. That's over 3% if you like Carnival Cruise Line. Okay, Saffron. We already looked at Walgreens. It was a no. Adobe. I'm pretty sure that's out of our price range. ADBE. Yeah, 350. Zoom in. Look at this right here. From here, 310 to 355 is 45 bucks. That's over 10%. Applied Digital. What's the ticker symbol there, Mike? Michael Combs. What's the digital? OKLO. Interesting. Take a look at this. You get top, bottom, sideways. What do you think? What do you think's going on there? What other questions do we have? Reckless Town, how are you doing? Nathan, MSTR is a no-brainer right now. Nathan, really? You want to go up? You okay? You putting your money where your mouth is, brother? Okay, let's do it. MSTR. MSTR. I said an M-A-S, a T-E-R, a G with a double E. Here we go. MSTR. Here we go. Strategy Inc. MSTR 183.30. There are no dividends at this moment in time. So, Nathan, explain to me in a manner in which you will, why do you think MSTR is a good deal when it has no dividend, which means they don't share their profits? So, what's the play we're talking about? Now, I like safety. I like predictability. I like simplicity. What do you have for MSTR? What's your thoughts? What's your theories? Because it has no dividends, so we can't figure out when is it going to move predictably. The reason I do dividend stocks because they're predictable. They do the same things over and over and over again. They have a tendency to go up just before the dividend dates. Well, if the company doesn't have a dividend, when does it usually move on a predictable time frame? Okay, no dividend. What makes MSTR so wonderful? I wouldn't buy it, but that's just me. What the hell do I know? What do I know? Here's your last 30 days. Okay? Last 30 days. 30 days ago, we're at 105. We jump up to 117, drop down to 91, jump up to 110, drop down to 80, jump up to 115. Now we drop down to 95 today. Now we close at 103, but down, up, down. It's on its way down at the moment. So why would I buy it? You're not giving me a good idea. You're not giving me anything to go on. No dividends, and it's in a downturn. Now, I'm not quite sure why you think that's a no-brainer, but it kind of is. I take one look at it, no dividends, and it's go down. Yeah, that's a no-brainer. I ain't doing it. Get it? No-brainer. I ain't doing it. Why? Because if the high is here, now it's coming down, and it has no dividends. No, I'm not doing it. ENR. Marta Rivers. Okay, ENR. What the hell is that? ENR. No. Sorry. Just no. You know why? December, January, February, May, December. Yeah, it's a monthly options, and I don't do monthly options. The numbers just don't work for me. NIBS. Hell no. And IBS doesn't even exist. CVS. We haven't looked at CVS in quite a while, and that's going to be, I don't know, it's a tough one. Look at what it's doing. Top, bottom, where was it? Where is it? Look at this. Up, down, up, down, up. It gapped up. So that's going to be a little bit concerning the last 90 days. Up, down, up, down, up, down, up. Look at it. Gapped up here. Your last 30 days is going to give me a good idea to say no. Here's your last 30. Down, up, down, up. Okay, look. Top's here, here, and here. Yeah, no, too close to the top for me. Don't get me wrong, I like CVS. Yeah, Nathan, you already said that T, we looked at T shop. Really? Shop? Isn't that, hold on, don't tell me. Shopify. What took me so long figuring out that one? SHOP. Oh, yeah, that baby's coming down. Okay, what do you think? Take a look. Who came up with shop? Phantom. Here's your last 30 days. The high was yesterday. The low was 3 weeks ago, 136 to 170. That's over 20%. 136 to 170. Yeah, no thank you. Too much. The profit ticket written all over it. Eric, how are you? Steve Rose, what's going on? Right. Max, oh, check TSLL out. What happened to it? Why can't you trade covered calls on it? Max, I have no idea. Okay, I jumped into TSLL like yesterday. Okay, I bought a couple of thousand shares and I tried to do a covered call on it and they wouldn't let me. Okay, so I said, the hell with it. I just sold it for a profit. Alex is in the house. Here daily. KVan, MOS used to be weekly. Yeah, you're right. KVan, MOS used to be a weekly. It's not anymore. I think we've been missing each other. Two ships in the night. Okay, you guys do whatever you're doing, all right? Alan, good evening. Hope you're well. I am lovely. Thank you. Rob, 007. I was suggesting it 2 weeks ago. You were suggesting what 2 weeks ago? Rob, you got to give me more to go on. Okay, so don't take this wrong, Rob. But I got nine cameras. Wait, 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 cameras, which means I got 1, 2, 3, 4, 5, 6, 7 screens with questions on it. So I was suggesting it 2 weeks ago. What were you suggesting 2 weeks ago? Jimmy, doesn't the price of the stock drop slightly the day after it pays its dividend? Yep. What's your point? See, I'm not looking for the dividend, Jimmy. Okay, I'm looking for the stock price as it increases going into the dividend. I really don't want to collect a dividend. I mean, don't get me wrong, it's free money. I'll take it, thank you. But I'm not looking for it because you're right. The dividend does cause the stock to go down after the dividend is paid. Mike Sweeney, what do you think your plan with Oracle will be? Milk it for every penny I can get out of it. And then when I'm done with it, toss it aside. Oh my God, I came up with a really good analogy, but we got mixed company, so I ain't saying that. Ain't no way. All right. KHC. I love KHC. We're just going to answer questions now because this is my Friday night. Okay, so you guys won't see me again until Sunday because I don't do Friday nights anymore and I don't do Saturday nights anymore. So let's see what more questions you guys can come up with. What do we have down here? You got it. Thanks for pulling it on my radar. Why are you back? Okay. This is the one that comes at 1.5. Okay. Mike, I'm not even going to entertain beyond. Not even. I start by dividing the income received by the strike price because it'll be the same return regardless of the number of shares that you buy. Okay. Lewis, are you talking about trying to figure out the rate of return? I'm just curious, what do you do when you trade? Did anyone get hit hard with Oracle? Uh-oh, Kevin's talking about Oracle, ORCL. What happened to Oracle? Oh, big drop. Hold that thought. Kevin, are you ready for this? I just brought it up, and yes, Kevin, I do own some Oracle, okay? Honestly, Kevin, I have no idea what happened to Oracle today. None. I turned my computer off at, what was it, 10 o'clock this morning. Haven't turned it on back until just now, and I just noticed just now after you said something, Oracle made a big drop. Well, I wish I could say the first thing pops in my head, but it's not nice. Here we go. You ready? Here's the top for Oracle, 340, 345. The bottom's at 120. So she goes from 120 to 340. Okay, that's a nice jump. A year ago, we're at 180. We dropped to 120, shoot up to 260, drop to 220, shoot up to 340, 342, back down, back up, back down. This is the area. Kevin, I'm going to show you this area right here. This is the last couple of weeks. And this is the part where I get mean and nasty. And this is where we say, oh, he's mean. I'm not going to listen to him. He's mean. Yep. The reason, because you don't learn, okay? Don't take this wrong, Kevin. You don't learn anything by being right. If you're right all the time, you don't learn anything. You don't learn anything until you fall flat on your face and you lose a shit ton of money. That's when you learn not to do something. Let's check this out. Are you ready? Here's your high right here, 236. Drops down to 185. Now, from 185 bottom to 225. That's $40. 40. It's a $40 move from 185 to 225. Now you do realize a $40 move on a $180 stock is like 23%. 23%, and you held it. I say this all the time. If you don't take your profits, do not bitch and moan if the market maker takes it away from you, which is exactly what he did. 185 shoots up, drops. You don't take your profit, don't be surprised if the market maker takes it away from you. That's all I'm saying. Okay? Stocks go up, stocks go down. So what are you going to do? Are you going to hold on to it? Because we're talking about Oracle here. Why did it drop? Why did the volume quadruple? Here, I'm going to show you something fun, Kevin. You're going to love this. Watch this crap. Let's get this. Let's get this out of there. Let's go right to here. Here we go. Here's the big chart. The big chart. Oracle, bottom 118.86, top 345.72. Okay, that's the whole year. Down, up, down, up, down, up. Big drop. Let's zoom into that big drop. Let me give you a different perspective of what's happening. All right, Kevin, you ready for this? What you're seeing in front of you today, right here. This is the 4th of November. So that's a couple of months, that's a while ago. So we're up here, we drop down, back up, back down, back up, big drop. What's this right there? That telephone call, earnings, dividend, all right there. Was that today? Hold on, let's do this. Oracle. All right, Kevin, you ready for this? Earnings and what is it? Earnings and conference call on the 10th, which was yesterday. Okay, right there. 4:05 p.m. Oracle comes out with the earnings. 5 p.m. Oracle had a conference call yesterday. Okay, whether they had a high earnings or whether they had low earnings really doesn't matter. Okay, because Kevin, check this out. You're gonna love this shit. You ready? Now, down here, these little blue dots right down here, that's volume. That's how many shares are traded on a daily basis. How many shares traded on a daily basis? That's these little blue dots right down here. So let's find out. On average, okay, on average, there's 32 million shares traded every single day on average with Oracle. All right, hold on. It gets really good. Wait, you're going to love this. Watch this. 32 million on average. So let's bring up the calculator. Okay, most market makers make between 1 and 2 cents per share when they trade. All right, well, let's put this right there. Get rid of that. Now, we're going to take let's give the benefit of the doubt. 2 cents per share. Okay, now anytime you go to a store, let's call it Circle K, Quick Stop, 7-Eleven, Quickie Mart, whatever. All right, if the owner of the store buys a gallon of milk, he'll buy it from the farmer. Farmer will come in with a bunch of gallons. Okay, fine. Let's say he buys it for $3. Then we buy it from him for $3.50. The difference between what the market maker buys and what he sells, okay, is called the spread. And when stocks trade millions of shares, the spread's usually only 2 cents per share. So if we're looking at 28 million shares, okay, 28,700,000 times 2 cents a share. Okay, what did I say it was? 28 million. 28,700,000. Right there. Okay, 28,700,000. $574,000 a day. That's what the market maker makes on an average day. $574,000 on an average day. Wait till you see what he did today. Hold on. Okay. Now, today, how much volume was there? We're going to add this to that. Get rid of this. And today, 100 million shares traded today. See that number? Oh, well, you know what? I'm going to do this. Check this out. Hold on. Let it pull up. Where is it? Come on. There it is. All right. Has a better view right there. Okay. Today, 12/11. Okay, the 11th day of December. That's today. 106,613,000 shares traded today. On average, this is it right here. That's average volume. So what happened today? Okay, well, last night they had the earnings and the conference call. Now, it's irrelevant what happened with the earnings. Is it good earnings or was it bad earnings? Well, that's kind of irrelevant. Because whatever the earnings were, whatever the conference call was, the market maker, okay, the market maker, this is where it was yesterday. The market maker took that information and then he opened up down here at 190. So it was at 224, something like that. Market maker took whatever information he got last night from the earnings report and from the conference call. Market maker took that information and he dropped the stock. Okay, the stock bottomed out here, went up nicely, and you didn't take your own profits, it's your own damn fault. Okay, if you don't have set in your head where your exit is, don't be surprised if you lose. Okay, you should always, anytime you buy anything, have a clear plan of what your exit strategy is. Okay, whatever you bought it for, 190, 195, 200, 215, 218, whatever you bought it for, you should have in the back of your head, where's my exit? If you lost money on that, or if you're at the tail end, apparently you missed something. If you didn't schedule what your exit target is, it's your own damn fault. Okay? If you don't take your profits, don't be surprised if the market maker takes it away from you. Okay? She shoots up nicely, big drop. So let's see, what did the market maker make? Okay, we already said he did 103 million shares. Was that right? 100 million shares. Okay, 100 million shares. So let's take 574,000. That's what he makes on an average day. Okay, now we're going to take 100,371,000, and we're going to multiply that by the 2 cents per share. Because remember, on an average day, certain amount of shares trade. Well, market maker dropped it, and now volume not doubled, tripled or quadrupled. Okay, so how much did he make today? What do you think? On average, okay, they usually only make, how much is it? 574. 574. But today he made over 2 million. So who really made money on that? Remember, if the stock, it ain't a profit until you take it. Same thing with a loss. It's not a loss until you take it. So the interesting thing about profits, number one, nobody ever went broke taking profits. If you don't take your profit, don't be surprised if the market maker takes it away from you. It's exactly what he did today. You buy down here, she shoots up. You don't take that profit, the market maker took it away. Now you got to wait longer for it to come back. Anyway, let's keep on taking a look at that. Questions. Sorry about that, Kev. What do you think about SPX? I don't even trade, don't care. Don't know, don't care. We talk about trading options, primarily covered calls on dividend-paying profitable companies. Thank you, Beast. I couldn't say it any better myself. Oh, what about buying options? Kevin, I don't buy options. 80% of all options expire worthless. And Kevin, remember, you're talking to Beast. Now, Beast is in his 20s. I'm in my 60s. Two totally different worlds. Okay, you were brought up in what do you call it? The 2000s. I was brought up in the 60s. Huge difference between the 60s and the 2000s. Because in the 60s, we had two choices, chocolate and vanilla. I actually remember when they came out with strawberry. It was a big hullabaloo. We're all like, really, what do you mean? A new flavor? Yeah, let's go get some. They didn't have strawberry in the 60s. Well, at least not in my little town. In my little town, chocolate, vanilla. That's all we had. Okay? Nowadays, you got what, 64 different flavors? Jimmy, so what happens on expiration date? You sell the call in order to collect 1%. No, Jimmy, I get my 1% from the very first day. Okay, Chris, Art, no rocket. I'm not looking at anything else tonight. Okay? So, Kevin, truly, sorry, dude, if you lost money on that one. And collecting the premium for a 1% return on a weekly basis. Thank you, Beast. But I thought he bought Oracle, and holding the stock means he's collecting income, but the stock is down 10%. Yeah, Kevin, right? Even though the stock dropped, I honestly don't care because the company is profitable. So yeah, it dropped. I don't care. I still own the same amount of shares. So next week, I will change the strike price on my Oracle shares. So I have some money coming in. So I bring money in every single week from every single position that I have, because that's what's interesting to me. You know, that's what I'm interested in doing. Because I'm 61, I'm retired, I don't work, I don't punch a time clock anymore, so I don't have money coming in consistently. The only money I have coming in is what I create from my my portfolio. Okay, so if I got about 150 grand in one account, that brings me in $1,500 a week. Okay, that's $6,000 a month. That's more than I need just on that one account. I got 7 different accounts, but I share 3 of them publicly, so you guys actually see exactly what I'm trading. All right, what else do we have? Rocket Lab, I'm not going to look at that. It's not old enough. I bought TSL today and sold calls for Friday. I had no problem. Well, yeah, I was told that the TSLL, we couldn't do that. Well, hold on, let me do this. Let's go back here. Let's change this to Monitor. Let's change this to this account here. TSLL. What do we have here? View trades. Yep. Okay. So, here we go. I got 200 shares at 2020, and I bought 1,000 shares today at 1927. So I now have a dollar cost average of 1942. Well, great. I want to sell the 1950s. All right, so I come up here. All right, and first of all, I get back to TSLL. TSLL. Okay, this is what it's doing today, going sideways. Okay, no big deal. The 1950s right here, sell 10 of them. Okay. Okay, so if I sell 10 contracts TSLL tomorrow morning, the 1950 for the 19th of December, which is next week, I can pick up 79 cents per share. 79 cents per share. Now, some of you guys think that's not a lot. No, it is. It's 783 bucks. Okay, I got 1,000 shares, which is 10 contracts. Okay, 1950, I'm getting 79 cents per share. That is 783 bucks just on this one position. Just this one position. Just one. Okay, I got a whole bunch of them. Okay, so let's send this off to the races. Do you see that right there? Not approved for this level option trading. That means I have to call that one in. Okay, it won't let me trade that. So I have to call it in. Now I own the 1,000 shares. I should be able to sell the covered calls. But let me do it again. Okay, the 1950s, sell that. Okay, now watch closely in the top left corner. Here we go. You're gonna watch really closely because it's gonna pop up on the screen and it's gonna disappear real quick. Ready? Right there. You are not approved for this level of trading. You have to call it in. That's what it just said. Now, I've been trading for over 30 years. I have the ability to naked trade. That means I can sell whatever I want, and they don't question me because I've been doing it for so long, and I have that repertoire with them. Okay, so yeah, I have to call it in, and that just pisses me off. Anyway, more questions. Next on the list. All right. All righty. Where are we? I'm going to read some of these questions for you guys. All right. Which is why MSTR is a no-brainer right now. Nathan. Okay, MSTR is a no-brainer right now. Yeah, no-brainer. Hell no. That means no, I ain't buying it. AT&T, yep, gotta love it. Where are we? Where are we? Where are we? Wes, Tilray, no idea what that is. Okay, Reckless, Dow, we already looked at it earlier. T-Boss. Okay, Pfizer, we'll have to look at it next time. Okay, I don't think a whole heck is going to happen a lot between now and tomorrow morning. But what do I know? All right, Robert, what's happening? Deferred. Chris, what's happening, Chris? Doesn't the price adjust for the dividend? How do you profit on that? How do I profit on that? It's a good question. All right, TSLL doesn't have any dividends. Macy's does. Macy's, there we go. Now, I'm not suggesting this, but I'm just going to show you something. All right, Chris? All right, yeah, Chris, you ready? The stock is currently at 24. Okay? If I buy the stock at 24, if I sell the stock at 24, I pick up 45 cents per share. So for the fun of it, let's see what that would look like. In my position, We're going to change it from here to covered call. And at the current price is 24, right? So I'm going to buy that right there, 24. Okay, there it is right there. So if I buy 10 covered calls tomorrow morning at the market, just change that to market. Buy 10 covered calls of Macy's, 19 December. That means the option expires next Friday. So what I'm doing is I'm buying the stock at the current price, 24. I'm turning around and I'm selling it at 24. Okay? So that's going to give me $510 of profit for that one trade. Okay? But it's costing me $23,000. So let's check out the rate of return. Okay, so we're going to go at 510 bucks. We're going to divide it by the investment, 23,496, and it gives me $496. It gives me a rate of return of 2.1%. Well, I'm not looking for a whole lot. I want to buy the stock, grab my profit, get out. Well, if I'm buying it at 24 and I'm selling it at 24, I'm still walking away with 2.1% for 1 week. Well, stock doesn't have to do anything because I'm buying it at 24 and I'm selling it at 24. The dividend's got nothing to do with it. The only thing the dividend does is it tells me when is the dividend being paid, because stocks have a tendency to go up in value just before the dividend date. So if I buy it, a week or two before the dividend, well, great. The stock has a tendency to go up. If it goes up over the 24, I get the stocks taken away from me at 24. I take my little profits. I walk away with 2.1% for 1 week. If it doesn't work this week, fine. I'll do it again next week, bringing in another 1 or 2%. And I'll do it the week after, the week after, the week after. I do it every single week on every single position I have. All right, we're past 11 o'clock. I'm done. My weekend starts now. So I'll see you guys on Sunday night. All right, now for those of you that are in my morning trading group, which I trade live every day, and it is a paid service. And no, I'm not going to try to sell you anything. I'm just saying, for those of you guys that are on that service, I'll see you tomorrow. Not tomorrow morning, tomorrow at 2:30, just before the market closes, because because weekly options expire this week, tomorrow at 3:59 p.m. So whoever bought them from me has the opportunity to buy my stock. So if you really want to know how to do it, drop me your number. I'll give you a buzz. That's it. You guys have a great weekend, and we'll do this all again next week. And now the end is near, and so I face the final curtain. I've lived a life that's full. I traveled each and every highway and more. Much, come on, much more than this. Oh, come on, there it is. I did it my way. Regrets, I have a few, but then again, okay, what is that question? Kevin, but I thought that he bought Oracle. Yep, whatever. Beast. Negative, not here, never. 80% of all options expire worth. Yeah, absolutely. Stocks can be down 50% and still collect weekly cash flow with a covered call. Absolutely. Kevin, curious. Is there, all right, hold on. I got to get a little bit more comfortable so I can get some of these questions down. I shut off the other one. And now the end is near. Okay, let's keep going with these questions. All right, curious. Is there a way to sell a covered call while at the same time using the premium collected to hedge the downside risk? Absolutely. It's called, oh, shit. Give me a second. I'll think of it. Ooh, back ratio spread. Ooh, you like that one. That's a good one. So, yeah, you could sell a covered call far enough out to bring in enough premium to pay for a put. If the stock drops, the put value increases. So if the stock drops, the put value increases, but then the premiums on the call options also disappear. Well, because if you buy the stock, sell a covered call, right? That means if the stock goes up or down, either way, it doesn't matter. You're collecting a premium on that position. Great. So with that premium you collect on the covered calls, you turn around and you buy a put. If the stock drops, well, the value of the options that you sold, the calls, they'll go to nothing, which is what you want anyway. But the put that you bought will increase so you don't lose any money. Now, what you get in return is a little bit less because, you're taking part of the profits from the covered call to buy a put. So there is a way to do it with even less risk, but then you get even less rate of return. So it really depends on what it is you're looking to do. So if you diversify enough, and let's say hypothetically, whatever you have, you get 5 to 10 positions. That's all. I don't want more than 10 positions. That's too much after that. That's for me. If you want to do 30, 40 positions, hey, more power to you. But here's the thing. You're not always going to make 1% on everything every single week. So sometimes you make 2, 3, 4% on some, and you make 0.5% or 1/4% on others. But when they all comes together at the end, it's average of over 1% on a weekly basis. That's my goal. So that being said, you guys have a great night. Let me see if there are any more questions we got here. Then you're foregoing the income. Not all of it. Not really, because you need to own 100 shares to sell one contract. The premium received is usually 1% or more. Not enough for 100% protection from the downside. Absolutely right. But if it goes down, you can sell. Yeah, you can sell the option, but why would you sell the stocks? Okay, I don't like selling anything at a loss, but okay. But what if the premium collected, you buy a put? Yeah, we just talked about that 2 seconds ago. Another call next week to collect more premium. Yep, same thing. You just keep rolling forward. Same thing. What if the stock drops more than that week than the premium you collected? Oh, he's going to play this what if thing all night long. I have no desire to jump into that one. That's fine. You pick the strike price out of the money and collect a little premium the first week, blah, blah, blah. Okay, same thing. Yep. Just keep working it out. Just keep working it. Nicely going, Beast. Nice answers. I like those. I'm not going to answer. I'm not going to read all of them. It's my Friday night. It's past 11 o'clock. I'm done. You guys have a great night. And we'll see you again Sunday night, same time. Have a great night, guys.